So what you're seeing in the last week is a mad scramble.
Yes.
Literally a mad scramble for Bitcoin, because in the first few days, actually first few weeks, every dollar that was coming in that BlackRock and Bitwise and Fidelity and Valkyrie had to buy, GBTC was selling, because they decided to keep their fee really high, because this was actually reasonably smart. I don't like it, but it was reasonably smart. They're like, look, the vast majority of our investors in GBTC, the trust, bought in at much, much lower prices. So they bought in at $5,000, $8,000, $10,000 Bitcoin. Now we're at 30, 40, 50,000.
Yep.
If they sell to avoid the high fee to go into one of the low fee products, they're going to pay taxes. Way better to just pay the 1.5% fee and defer the taxes. So that was actually a genius move on their part to keep the money train going, because DCG has its own problems, and Barry, is being sued by the AG and all this good stuff. But that wasn't a bad. But the people who had it in a retirement account where taxes don't matter, they're like, I'm out. I'm going to transfer to Bitwise, where I can pay 0 for the first 6 months, or to BlackRock, where I can pay 30 basis points. So that every day, 200 million, 400 million, 500 million was coming out. And that was available to buy with the new inflows. Well, suddenly no one was selling GBTC, and they still had to come up with, on some days, 10,000 Bitcoin. There's only 900 created every day. So you had this massive supply-demand imbalance. And the rumor was yesterday or the day before that the OTC desks basically
were dry.
They just didn't have any Bitcoin to sell.
In 2024, we're anticipating an unprecedented surge of fiat money flowing into Bitcoin, surpassing all previous records. A staggering $300 billion is projected to enter the market this year alone, propelling prices to unprecedented heights. This bold forecast comes directly from Mark Yusko, who recently shared his insights on Bitcoin's remarkable performance in 2024, highlighting how the introduction of Bitcoin ETFs has profoundly influenced market dynamics. Yusko also shed light on traditional bankers' apprehension towards Bitcoin, attributing it to their inability to exert control over it compared to traditional currencies. However, he reassured viewers about Bitcoin's security, emphasizing its resistance to theft, unlike physical cash. Additionally, Yusko made a daring prediction that the amount of fiat currency converted into Bitcoin this year would surpass the cumulative total in Bitcoin's entire history, indicating a burgeoning confidence and trust in Bitcoin as a viable investment avenue. For those eager to learn more, Yusko promises to reveal the key catalysts poised to trigger a significant price surge for Bitcoin in the days ahead.
I think we absolutely have met and exceeded expectations, especially because expectations changed very dramatically right after the release of, or the approval of the ETFs. So, coming into the year, I was pretty convinced that they were going to approve the ETFs, and that was going to accelerate this slow trend toward fair value. And fair value, if you look at the Metcalfe's Law model, we talked about this last year even, was somewhere in the low 50s. And so by the halving, and the halving is, third week of April this year, I thought we would drift, from the 30s up toward 50, and people would be pretty happy with that. But the accelerant to that would be the approval of ETFs. Well, why is that an accelerant? Well, it's a demand shock, because what the ETF does is it opens up the opportunity to invest in Bitcoin to a larger group of people. And, since I am a boomer, I can say it's a boomer wrapper for those investors that they're not really comfortable negotiating online. They don't really want to carry a ledger around. They don't even really trust Coinbase yet. So they're like, look, if you're going to put it in something I can put in my 401k or in my Schwab account, bring it. But here was the problem, is first you had to have approval which, Gary Gensler had been against until the courts kind of ruled, or judge ruled against him. So he had to go ahead and approve it. But then there was a second leg, which we saw in the week after. And that's what I talk about expectations changed, is there were a lot of people said, oh, this is a buy the rumor, sell the news. It's already priced in. And we had the move from 30 to, I think we got all the way up to 47. And we said, oh, it's going to crash right after. And right after the approval, Vanguard, Bank of America, a handful of others said, no, just because you approved it, we're still not going to allow our clients to buy it. Now, think about what they just said.
Right.
They're telling us, humans, that the money that's ours, that we put in their company, we can't use to buy what we want. And I know you guys have experienced a lot with cannabis and other. It's just ridiculous. So in the past week, we've seen the CEO of Vanguard mysteriously retire. Maybe he was fired.
Do you think that was attributable?
Look, he was there 33 years. Maybe he was planning to retire anyway. But I don't know. I think he made a call, or someone made a call. I think they got a lot of pushback, and I think they're going to change their mind. Merrill Lynch has changed their mind. UBS has changed their mind. So people are coming around. So all that said, now we've had this massive run. We went from 47 all the way back. I think we hit 38. And people are like, see, I told you, sell the news.
Yeah.
And the stalwarts were like, that's a gift, right? I can buy more at a cheaper price. Now,
Mark Yusko provides an insightful perspective on Bitcoin's trajectory in 2024, predicting a significant influx of fiat currency into Bitcoin, more than at any previous time in its history. He explains how the recent approval of Bitcoin ETFs has catalyzed a demand shock, attracting more investors to the cryptocurrency space, especially those hesitant about navigating online wallets or exchanges. Yusko criticizes traditional banks for their resistance to Bitcoin, suggesting their reluctance stems from an inability to control or benefit from it, as they do with traditional currencies. He underscores Bitcoin's security advantages over physical cash and its ability to operate independently of traditional banking systems. Yusko anticipates that with $300 billion expected to flow into Bitcoin in 2024, driven by institutional and individual investors allocating a small percentage of their portfolios to Bitcoin, the cryptocurrency's price will reach unprecedented levels. His comments highlight a growing trust in Bitcoin as an investment, despite the skepticism from traditional financial institutions.
If you, and I don't even call myself a conspiracy theorist, but if you believe, as I do, that if you're a large investor and you know that you need to buy a big old chunk of something, what is the oldest trick on Wall Street? What do? Right? If you want to buy a lot of something, you actually sell it. You actually spread rumors that it's lousy and you push the price down. I mean, Dwight Anderson used to work for Julian Robertson. He tells this story all the time. They wanted to buy a big position in copper. And he's like, all right, Julian, here's my report on copper. Let's go buy it. And Julian's like, are you joking? We'll sell 50 million copper. And then you tell people that we're selling copper. Because I want to buy more than 50 million of copper. I want to buy a lot of copper. And Soros would do the same thing. And so BlackRock knew that they were going to have to buy a bunch. Perhaps they were the ones telling people to sell. I get it that the bankers don't like this technology, right? Bitcoin in particular it obviates the need for the trust industry.
Right.
We talked about this in past shows, right? If in the old days, if I wanted to lend you guys money, we had to have ledgers and we had to have somebody make sure that the ledgers were accurate.
Yeah.
That somebody was the banks. For 838 years, it's a long time, they took a very nice fee for making sure that our ledgers matched. Mm-hmm. And we trusted them. Mm-hmm. I don't know if I told the story on here, but imagine I have this recurring nightmare. I go to the ATM, I punch in my code, and it says 0. How would I prove it's not 0? I don't have a statement. I haven't had a statement in 10 years. It's their word against mine, right? I'm trusting them that they didn't steal all my money. But if they wanted to, they could pretty easily. But with Bitcoin, I don't have to trust them anymore. If I own a Bitcoin on the network and all the nodes agree that Mark owns that Bitcoin, I am my own bank. So I understand that the banks don't like it. Because to your point, if I'm a big institution, okay, and I want the price to go down, let's say hypothetically, although this is not hypothetical because they got caught and they had to pay $1 billion. $1 billion. $1 billion. JP Morgan paid actually, it was 960 million, so it wasn't a billion. But let's call it $1 billion. Let's round to $1 billion. Fine for doing exactly this. They would short gold naked, which you're not supposed to be able to do, using future. So there was no gold involved. They were just shorting paper to push the price down, because if gold prices rise, people freak out. They're like, you're devaluing my currency. They didn't want the world to know they were devaluing the currency. So as they printed more dollars, the price of the gold started to rise.
Right.
So then the big bank said, no. We need to put a tamper on that gold price. It's called spoofing. And so 2 years ago, they got caught and they paid this fine to the SEC, 960 million. Now, the funny part was they're like, well, yeah, but we made 20 billion doing it. Correct. So it's just like a cost of doing business. It's 5%. Who cares? Now, in the Bitcoin world, that happened. But we got to the all-time high. Literally, on the day of the launch of these futures-backed ETFs, the price started down and we ended up going down 74%. Now, that wasn't all the banks shorting. It was people freaking out and people who had bought, buying what they wish they would have bought, selling. But the key was the beginning of that was this paper manipulation. The difference this time, these are spot ETFs, meaning when BlackRock gets an order, or when Bitwise gets an order, Fidelity gets an order, they have to go find actual Bitcoin.
Yes. They
can't just buy futures contracts and pretend that they have Bitcoin. If you look at its curve, it is exponential, right? And that point, it's exponential in two ways. One, it makes these big parabolas and then it crashes, and it makes another parabola. But what it also does, it makes a parabolic Metcalfe's law curve, meaning going from $1 to $10 is a massive move, percentage-wise, right?
Yes.
10 times. Going from 10 to 20, that's another 10, but it's not that big a move.
Yeah.
So the law of large numbers starts to catch up. But here's the rub. Your point on how much money is coming in is really, really important. And I made a comment the other day on Twitter that if I believe this year more fiat will be converted into Bitcoin, actual transaction, not paper, but actual transaction, than the history of Bitcoin. In the first 15 years, and I haven't done the math exactly and counted, but I think it's right around 300 billion. I think it's a little bit less than that.
And that's what? That's 1%?
And exactly. But the crazy part is that's on $1.2 trillion of market cap. But if it's 1.2 trillion, didn't 1.2 trillion come in? No, that's not the way it works, right? Because if I'm trying to put $1 in and you have $1's worth of Bitcoin, you may say, you know what? I'm not selling it for $1. I'll sell it for $1.20. I'll sell it for $1.30. I'll sell it for $1.40. And so what happens is the people that came in early, right? They had to put a very small amount of money to get a huge amount of Bitcoin. In fact, some of them didn't have to put in any money because they mined it. And so as that then matures and people put new money in, then the amount of capital that converted to Bitcoin is a certain number. But then if you and I trade that same thing, we're not putting any new money in, right? So it's called a multiplier. And so some people have estimated that the multiplier is like 100. I don't think it's that high. So like if a dollar comes in, the price goes up $100.
Yep.
I don't think it's that high. I actually think it's a meaningful number. And so if you look at the last time we went from 10,000 to 60,000 back in 2020, only 10 billion came in. Think about that. The price quintupled, or sextupled, and we only brought in 10 billion into GBTC. This time, we've already had more than 10 billion come in, and we went from 40 to 68. But why didn't we go up the same amount? Again, law of large numbers. But here's your point. How much is going to come in? I think this year, 300 billion, which again is more than all the money that's been converted in the past, comes in. Well, where's that 300 billion number come from? Not just out of the sky. There's 30 trillion with a T, and that's, remember, 1 trillion is a dollar every second for 31,710 years. That's a lot. 30 trillion owned by us, boomers, controlled by our advisors, the UBS, the Merrill Lynch, the Vanguard, whatever.
Okay.
If those advisors say 1%, that's 300 billion.
Wow.
So it's not 10%, it's not 50%, 1%, which is a reasonably logical number. 2% is better, 3% is better, but 1 is logical. If 1% comes in, that's 300 billion. And that 300 billion, I think, will move the price materially more than 300 billion.
So there's Mark Yusko sharing his insights on Bitcoin's remarkable performance in 2024. He emphasized the game-changing impact of Bitcoin ETFs and shed light on the reluctance of traditional bankers towards Bitcoin. Yusko also reassured investors about the security of Bitcoin compared to traditional currencies. His prediction about more fiat currency being converted into Bitcoin this year than ever before highlights the growing confidence and interest in Bitcoin as a valuable asset. Overall, Yusko's analysis offers valuable perspectives on the evolving landscape of Bitcoin and its potential as a transformative investment option. Before we wrap up, a quick reminder for those eager to stay updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our channel.